What is commercial property investing? Investing is an effective way to put your money to work and is key to creating the financial future you want. There are two main types of property investment. One is investing in commercial property and the other is residential property. Both of these offer a physical bricks and mortar opportunity to get your money working harder for you, grow your wealth and gain a regular income. Commercial property investment is becoming popular and there are several ways you can invest. One main way is an investor can buy a commercial property directly, which can be expensive and normally requires the individual to have a deep knowledge of the market. An investor could also buy indirectly through listed stocks on the share market, pooling money together with other investors to create a syndication that owns just one commercial property, or invest through an unlisted property fund that usually includes multiple commercial properties. All of these indirect options have the benefits of ownership without having to fully purchase and manage the property yourself. PMG, for example, is a commercial property funds manager that acquires quality properties across New Zealand and places them into strategically managed funds. A fund may have 2 or even 20 or more properties in its portfolio. Depending on the fund, these properties could be industry specific too, like our PMG Direct Childcare Fund that holds quality early childcare education centres, or it could be a mix of retail, industrial and office. Diversification is a well-known investment technique that has the potential to reduce an investor's risk by spreading the risk and makes for a defensive investment. PMG's funds are normally diversified by property types, locations, sectors and tenants, and can be strategically positioned to help absorb short-term economic downturns, vacancy or even a pandemic. In turn, this helps protect an investor's hard-earned money and their returns. So, how does it work? An investor can purchase units or shares that give them a portion of all the properties that sit in that fund. Offers to buy into a fund are generally available when the fund is acquiring new properties and when the fund is open for investment. A fund generates income from the rent paid by tenants in the buildings. That then becomes the investor's monthly or quarterly cash return, also known as a distribution, paid in proportion to how many units or shares they own. Investing in commercial property is best looked at as a long-term strategy because a fund can also provide capital gains over time. This is the increase in the value of a property or properties owned by the fund over the holding period. However, this is only generally realised when an investor chooses to sell their units or shares. For example, an investor could invest around $20,000 in one of PMG's funds for $1 per unit or share. That would mean they own 20,000 units or shares. If the fund has a gross cash return of 5.5% per annum, an investor could then receive approximately $92 monthly or $275 quarterly before tax or any fees are deducted. The same goes if they buy 100,000 units or shares or 1 million. At PMG, we provide investors with choices to suit their goals, with entry levels as low as around $1,000. To learn more about commercial property investing and how PMG could help grow your wealth, talk to our team today for a no-obligation consultation or head to our website pmgfunds.co.nz.